Good afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the suburbs of Chicago with another episode of the 2 Minute Drill. It was a big day. The grains were starting to make a little bit of a move mid morning, early afternoon. Cattle markets on the move. Unfortunately for the bulls, it was to the downside, as I think just kind of the risk of headlines still lingering out there. And then the outside markets, a lot of movement there, particularly this afternoon following Federal Reserve Chairman Jerome Powell's press conference and speech, where rates were unchanged, but more importantly, it sounded like he was hinting towards the fact that rate hikes were pretty much all but off the table. Whether you want to believe that or not is up to you, but the markets are responding accordingly. We're seeing a little bit of a risk on trade. Equity markets rallying. You're seeing some of these other commodity markets rally as well, like gold and silver, which is nice to see. But we aren't going to focus on those markets here today. We were going to touch on a few other ones before we get into the charts. I do want to remind you, if you have not tried out a demo of our Blue Line Edge trading platform, it is free on our site. It is also free if you become a client, desktop and mobile. Very great way to keep tabs on the markets. And then we always have a trade desk available as well for you to use as little or as much as you need. We've got a lot of clients that trade on their own, and a lot that like to work with somebody and kind of have somebody in their corner in times of indecisiveness to kind of line up a strategy that suits their needs. So without further ado, I guess we can get into the charts. Right here we got the July Chicago wheat contract pulled up here, and this has caught a lot of attention here as of late. Maybe not so much over the last couple sessions, but we did have that big rally that started on April 19th. It was about an 80-cent rally from low to high, and it was about a week long. Now we're back testing, and we talked about this 590 to 595 level in our interview with RFD TV on Monday morning with Scott the Cow Guy being the big pocket that we're keeping a very close eye on. Now, $6, probably what a lot of people who aren't involved in the markets were looking at, because it's psychologically significant. But 590 to 595, that was the old breakout point and the secondary breakout point for this move. If you go back even further, you can see this was support back at the end of November. It was support in January, and the eventual breakdown point in February. So that support became resistance to start this year's trade, and then we accelerated to the upside. And then the pullback, the 50% retracement comes right in here too, about a 592, 593. So market settling back in there so far, defending that over the last couple of sessions. So if you're bullish the wheat market, this may be a decent opportunity to look to the long side. Obviously, you're going to want to manage your risk. The wheat market can be very unforgiving. So a break and close below that 590, 595 pocket would neutralize our bias, but from a risk reward perspective, we think there's pretty good value there in the short term, especially after this afternoon's Federal Reserve press conference with the dollar coming off. You would think that that could be potentially a tailwind for some commodity markets such as wheat. Now moving over to the corn market. Corn has just been an absolute stick in the mud, but I tell you what, today's session was really impressive. We marked lows about 15 minutes after the regular trading hour open. We took out the previous day's low, which was basically just a retracement of this breakout point from April 22nd. We held that and then closed at the upper end of today's range, posting a high of the day in the last 15 minutes. So again, as with wheat, looking at some of these outside markets following the Federal Reserve meeting, if we continue to see this dollar retreat, potentially that offers a tailwind to the upside. Now, the big upside levels that we're looking at and have been talking about in our daily commentary, that 556 area to 560, we're still a ways away from that. But if we are able to get a nice tailwind and a strong close above those resistance levels, I think that's when things start to get a little bit more interesting. Volatility in the corn market is relatively low, so options could be a decent way to play this with limited risk. If you have questions on what exactly we're looking at, feel free to give us a shout, and we'll be happy to help you with that. Last, and certainly not least, we've got cattle. Now, cattle obviously just had a tough day, and we've been talking about this in our daily livestock roundup that goes out each and every morning before the open. The fact that, one, seasonally, this isn't a great time to be super bullish on live cattle. Two, this headline risk with regards to the bird flu, whether or not there's any there, it's probably going to keep a lot of buyers at bay. So you're starting to see that concern kind of keep a lid on things and the selling pressure uptick. And I wouldn't be surprised to see these headlines continue to come in and out of the market here in the very near term. So I don't think this is going to be resolved in the near term, and that probably keeps buyers at bay. Now, with that said, funds are long only about 40,000 futures and options contracts. I imagine that's quite a bit less now after the last 3 days. But the risk of long liquidation, or the velocity of long liquidation, isn't what it was a couple months ago or last fall. So I guess that's a silver lining. Ultimately, we continue to think that we could settle into a range here. 170, you can obviously see down here, 171 as the low end of the range and 180 at the upper end of the range. So that's kind of what we're looking at for the June live cattle market. Right here in the middle, not a whole lot to do. I'd be looking to be potential buyer at the lower end and a seller at the top end. So that's what we're looking at. If you've got any questions at all, feel free to reach out to our trade desk. We are here to help. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.